presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Hey, what's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic week, fantastic day, TGIF, as Tom would always say. If you're watching us on YouTube, welcome. Please consider liking the stream. We're going to talk a lot today about Tesla again, because some more developments happened. Qubit, because they posted abysmal earnings, and I think that retail is still coping a little bit with that and adding more money into it without really knowing the value of the contracts that they have. So I started interacting on Twitter again. I had to get off that app. That app is just, I'm sure if you wrote Dante's Inferno today, that would be up, definitely upper rings, but definitely a part of it. Horrible application. But you had such, hairy earnings here, and the retail guys on Twitter love Qubit. And what I was seeing a lot of the fans, these are from big accounts, that get tons of engagement, okay? Just what they're arguing is the runway for Qubit is just not actually real, and I think that retail floats a lot of this stuff. I mean, for instance, most of what you're seeing with Tesla on this run up here is retail, which tells me that we're not even at a bottom yet in Tesla, right? Because until retail gets so just annihilated, unfortunately, that's when you get the bottoms, right? When their liquidity just kind of evaporates. So what I think is happening with Tesla is, I don't know. We're going to talk about it. I think this is not good for the stock. Not good for retail right now. I think what Elon said today was honestly not good either. And we'll talk some more about that. And then, of course, Qubit is up. Let's see. It was up like 7% when I was looking at it earlier, but it's probably, it's actually down 1.35%. And really, this is just insane in and of itself. That it even rallied on that on those earnings, because it quite clearly demonstrated that this is not that company, right? And I think people just have a little bit of a confirmation bias in it, unfortunately. SPY, we're off today, 0.63% at 561.89. Okay, you have the composite, and we're shaping up to have some basically similar volume. Okay. And a lot of this is going to be the consolidation pattern, I think, from the 560 up till about 570. Composite off about 0.15% at 17,665. Dow Jones Industrial off 0.24% at 41,850. And the Russell futures off about 0.69% at 2,071. You get the dollar ticking a little bit higher, up 2.8% at 104.06. Crude oil. Okay, crude oil's, this is the contracted least, up 0.43%, but it's trading at its lower range that it's been trading at really since 2021, right? So much lower does it have to go? It seems like for sure Brazil is going to get this oil output online. Saudi Arabia too. You just had the AOK for extra drilling out in Alaska. This is what I want to look. U.S. oil and gas rigs rise for the first time in 3 weeks. Added oil and natural gas rigs for the first time in 3 weeks is from the energy firms. Wow. Oil and gas rig count, an early indicator of future output, rose by 1 to 593. This is going to continue to increase. On the gas side, the EI projected 91% increase. This would prompt producers to boost drilling activities. So, I mean, you know, what's hard to say with it, and I'm not really a commodities guy at all, but it seems like it's interesting. You might be able to go a little bit lower if you have such an oversupply, which is what people are kind of anticipating. But you take a look at the chart on the long term, and this is really like the low it trades in. You know, I mean, obviously, you know, you ignore COVID because that was insane. But, you know, you get some recovery a year afterwards, and we're just right at those levels. Okay, so I really do want to get Teddy Keksad on to talk about this a little bit more. Does he see that this is really the true stable price, that this price is locked in for that kind of environment? Of course, if you want to get some early access to that, you can just go to TFNN, go to the newsletters tab, and you know we have the Tiger Forex report. He releases that once a week on Monday, so you can kind of get in there. But I really do want to have him on as well. And he was joined by Tommy on Wednesday morning. You check out that on our YouTube channel, that archive. Taking a look at the gold contract, off about 0.58% today at 3,026, still very strong commodity. Copper off a little bit as well, and silver continuing to kind of underperform, at least if you're considering the massive movements you saw in copper and gold yesterday. But silver is also off as well, about 1.55%. The 10-year. Okay, so you have the, again, rates coming up a little bit, right? What is it actually? I think we're at 4.23%. Yesterday. I'm going to have to close that window there too. If you guys can hear that AC unit, I apologize. Trading it, okay. I mean, nearly unchanged in a way. We're 4.24 right now for the 10-year Treasury. But it not coming, down substantially. It ticking up a little bit. I think, this movement down is nice. Coming up from 4.3, we're really trading at 4.2. I think does demonstrate that at least the bond traders do see rates coming down and staying there in a meaningful way. One of the things I get worried about is because, you have something like $6 trillion or whatever in U.S. debt needing to kind of get refinanced in June, you need these rates kind of lower. And so what I fear happens is that you get rapid rate cuts up into there, right? And I really probably don't think that Powell would do this. I think this is a little bit harebrained what I'm saying. But I thought the rate cuts in November or October, where he cut by 50 basis points was insane. I could see some kind of rapid rate cut in order to get cheaper pricing, but inflation is still high, right? And growth is still contracting, or at least projected to contract. I'm not saying we're going into a recession or anything. I just think the problem is when you get that growth coming down, but prices accelerating. You run into a problem, and I don't think you can really lower interest rates in a meaningful way when it's like that. Now, might all get proven wrong, and maybe you can do that, but that just kind of goes against the traditional wisdom, right? But what's going on now is really anything but traditional, I would say. You have Apple trading up 0.43%. They've had some major missteps with that iPhone 16. We'll see if they can get Siri working. One thing I do think is interesting is their foldable phone that should be coming out in 2 years. I think that'll be nice, but that doesn't really mean a buy now for Apple. Folks, you stay right there. We'll be right back. We'll talk a little bit. Man, we got to talk about Tesla, Qubit, Oro, all these kind of things. Stay right there.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kekstak's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kekstak releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. I actually did speak with Tim Ord a little bit earlier. I wanted to see if you wanted to come on, because it's unfortunate he has so much he wants to kind of go over, and obviously there's a lot going on in the market. But the snowstorm was just brutal, I guess. So we'll be keeping track with that. Still was sharing some interesting thoughts on Goro. Goro was up about 11% earlier today, but it's trading down now by 5.21%. So kind of interesting. He really likes it. I think we're going to talk a lot more about this on Tuesday. Can't wait to kind of hear more about that. And I think I can speak for all of us where, like, I mean, especially younger guys, gold is just not. Had not been attractive, but I mean, now with all this uncertainty, I can certainly see why it is. And when you're talking about having the miners kind of catch up, right, with the increase in the spot price, it's really the junior miners that kind of blow up there, right? Anyways, you got the SPY trading off 0.62% at 562, composite off about 0.11%, and Dow Jones Industrial trading off 0.21%. Okay, let's talk a little bit about Tesla. Okay. Trading up 3.77%. I'm reading what Jeff is saying in the YouTube chat. Yeah, X is very ugly these days. It's horrible. I can't stand this application. It's unfortunate, because I used to like Twitter a lot. But anyways, I do go on just to see what sentiment is. Again, that's kind of just part of where I gain that whole kind of concept. But it's not good with Tesla, meaning people are seeing this as a massive bottom, right? Like, this is the bottom, right? And of course, you had that high volume low right around May 10th, okay? And we moved up a little bit, down again, and now we're trying to traverse back up to that 250 level. If it can't hold, listen, I definitely think we're going a lot lower in this, right? And so what I've been seeing defense-wise for it is mainly optimists. I had some guy respond to me because I was asking questions on a big account, and he's like, Optimus will be the largest product ever in the history of the world. And, I think that does kind of, encapsulate or at least represent a lot of the ways that, like, retail thinks. Another thing that I've seen, this is speaking as someone who's a retail investor, and I want us to win. I really do. But I think sometimes we can get taken up in euphoria of certain things. And a lot of what I see as well is saying, listen, this is a momentary pullback in the stock, right? We're going to go back up to the levels that it was trading at. But I think people are maybe not understanding entirely. And I've been guilty of this with things in the past for sure, which is why I have this perspective. But I almost feel like we need to forget everything that happened here. because this didn't move on anything solid. It moved because Trump won. And so this legitimately, I think, is kind of where this probably should have been. I mean, we're trading back to these October levels, right? November levels as well, right before Trump won. And then things have gotten worse for the company since then, which is kind of like partly my fundamental thesis on why this stock should continue to go down. Additionally, this move we've been seeing since the high volume lows has been from retail. You had $12 billion, at least in the market itself, coming from retail, and a lot of that is going into Tesla. And it takes retail's like the last one to be like, I am done with this. I'm not taking this risk anymore. I'm out, right? And so what I fear with Tesla is that people are thinking this is an oversell, where I believe it was a vast overbuy right when Trump won. And so I think everyone's time frames are a little bit skewed on this. And so I don't know. I don't think this lasts at all. I don't think Optimus, I think it sounds very cool. I think the showcase of Optimus was abysmal. It did not prove to me that these robots work at all. I'm very convinced that people were speaking through those robots just because of how it sounded and what I know is capable with conversational AI that uses voice. Additionally, this is a little bit different. I think people look at Tesla like they're always the first movers, right? And of course, SpaceX is cool, but that didn't have anything to do with Tesla whatsoever, which is another argument I've seen. It's like he just got astronauts back from space. I'm like, where does that show on the Tesla balance sheet, right? It just doesn't. With Optimus, there are other companies. This is not the thing with full self-driving and EVs where Tesla was really the first mover, right? And I think they suffer from that as well, right? Because when you're first mover, you get that advantage, right? You can make a name for yourself, but then you get these new cats on the street that see what you're doing and kind of learned it, and they can kind of make it a little bit cheaper. I think them not using LiDAR is probably going to end up hurting them quite a bit, since LiDAR has apparently become very good with self-driving. You need so many things to go right immediately for Tesla to realize this value that I think it even has priced right now. I think that's just way improbable. With the AI robots, very similar to the robo-taxi, which again, I do not think is going to be fully adopted in June of 2025. They might get something on the road. I don't doubt that. But you're talking about, again, there's a ton of competitors. I mean, Lyft just partnered to do full self-driving, these auto taxis. Tesla has nothing to do with that. And it's the same thing with Waymo as well. For this to work, you need complete federal clearance that you're going to allow cars with no drivers to operate on the road, right? Tesla either makes its own taxi service, which I think is going to be expensive, or they sell it to things like ride-sharing apps, which I think they're already getting out-competed in, right? As we see with Lyft. And then you need the technology to actually work. And again, what they're doing is using this like big hive mind AI to move the cars around. And I think the idea is interesting and it is cool, right? But it's just so much more complex than what competitors have rocking. And so they're going to do the same thing with the Optimus. Is the idea for them to walk around and be autonomous? They're gonna communicate with that big AI. And I just think that, again, it's very neat, and I don't like punishing people for taking risks that push our technology forward. And if you've listened to me for a while, you know that for sure. So this is not like just some weird Tesla hate that I have or weird Musk hate, because it's not. It's just I don't see where those benefits materialize in any meaningful way in a short amount of time. I also think, again, you have a bunch of competitors in robotics. Honestly, I think Boston Dynamics robots are far better than at least what we saw with Optimus. You have Apple supposedly getting in there. You have a bunch of different companies trying to get in to make these anthropomorphic robots. And if people buy it, that's great. And the market is actually there, which again, I'm not super convinced that it, will be that large of a market in the beginning. I think this takes a long time to ramp up. But why buy Tesla robots? Why buy Optimus over these other ones? We don't even know what the competitive landscape truly looks like at this point. So you're pricing in this like near perfection and really the perfect execution of what Musk is promising. And I think the reality of the situation, at least as we have now, is that those things aren't material yet. They're probably not going to materialize in the near future, and their sales are going down. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Raul, thank you, man. Have a great rest of your day as well. And Octavius, for sure. The way Tom was able to really perfectly mix like entertainment and like just great quality analysis, man. I mean, it's just a loss, you know. But yeah, absolutely, Octavius. I know I miss that stuff too. Yeah, entirely agree, man. Entirely agree. We got the SPY trading off 0.63%, trading at 561.87. Composite off about 0.11%, 17,671. Dow Jones Industrial trading off 0.29%. Listen, part of me feels like, I mean, this is red right now. Okay, we're having a red day. Things like Tesla, I think, are just going to be a rug pull in a lot of ways. I'm going to be done talking about Tesla right now, but we're going to follow through. Might buy some TSLQ just to prep for next week. So we'll see what happens. Obviously, you had FedEx kind of contract a little bit. That could be a little bit negative market sentiment, or at least market sentiment. Just kind of seeing what commerce looks like in the near future. I mean, listen, I to some extent, I'm not sure if the contraction and growth is completely priced in yet. I'm surprised that it's holding, especially like in the SPY, like holding at these levels. I know what the Fed said was very dovish. I didn't think the data was super phenomenal, so I don't know. We'll just have to kind of see what happens. Really what I'm leaning more towards is like inaction, really with consolidation, kind of leaning to downside. The home builders got smoked. I wish we had time to speak about this yesterday because Len was coming out, and I kind of wanted to buy puts for it, but I didn't end up doing it. Home builders are really ones I kind of more follow and don't take action on. I know Tom really liked playing Toll Brothers, and that gave me some good insight. But you did get kind of smoked today. I'm interested in some of the bullish defense for home builders. Now, February apparently was very good. You had some people that are just going to absorb these kind of higher mortgage rates, and that seems to be going all right. Now, those are existing homes. But for home builders themselves, they're kind of, between a rock and a hard place where you have this uncertainty with tariffs. And I think even if you get rid of a lot of tariffs, that the Canadian lumber tariffs still exist. I mean, again, such a fascinating story of what's been going on in this kind of trade war we've had with the Canadians and lumber for such a long time. So that might be worth kind of looking into for you guys. Additionally, companies like Lennar are having to kind of like offset, like lock down lower mortgage rates, right? And you're just really selling these homes at discounts, and that cuts into your margin. When does that improve? And I excuse me. I don't know. I mean, do mortgage rates actually come down substantially, even with a lower Fed fund rate? Are we going to see some better movement to the downside to the downside of the 10-year rates at least? I don't know. I don't feel like that is something you can safely say right now. And so the bullish sentiment on the home builders right now is a little bit interesting to me. So it's a group I follow a lot. I mean, I think it's very good, kind of barometer for a lot of the, economies. So I don't know. But I mean, you look at other things, like consumers are completely strapped. I mean, you have the highest, per capita number ever right now of people 60-day delinquent on their car loans. You have I can't remember the name of that darn company. We were looking up at earnings that surged like 30%, but they're doing like short-term loans at a 36% APR, and you can do it to like buy food or pay off credit card debt. I mean, that stuff is like terrifying. And then you have Klarna coming out. Poor Affirm got totally kicked to the side by Walmart. I mean, that's just a total loss for Affirm. Klarna, I think, is going to IPO. Still up 3.36% today right now. I mean, listen, I really do believe that even with the firm losing Walmart, I definitely think Klarna is proving to be a little bit more competitive than a firm right now. But this whole sector, I think, is going to continue to be very strong. And now they're making a plan with DoorDash to do installments on burritos. Install payments. Like I don't know even how to think about that, right? It's kind of like doomy a little bit. So I think this economy is weird. Now, what I will say is we kind of saw this issue in 2022, right? People were very strapped. You had delinquencies increasing, and the wealthy in America were able to float, kind of. Right? I mean, you were seeing like highs being made, or at least strong earnings rather, in like luxury brand goods. things are still chugging along. And so that kind of saved us, I guess, from having like a real recession. I don't know. Everything's kind of screwy, honestly. And I get worried that the disparity becomes, and I'm not being some like, workers of the world unite when I'm saying this, but I think for the health of our country, trying to figure out why this kind of stuff is occurring, why people feel the need to, do, payment installations for burritos, man. I mean, that's freaky. Now, like, the answer could be that people are just bad with their money. Maybe that is the case. Maybe it's that things are more expensive right now. Maybe there's more things that you need to purchase in order to live what is called normal life. I mean, these are things that we should genuinely look at. And as Americans, we should want the best for our fellow citizens and try to figure that kind of out, So anyways, I don't know. At least in the meantime, I don't think things are going to improve for the common person in a major way, at least regarding their finances. I do think retail investors are going to get, tossed the bag here probably next week. And companies like Affirm and Klarna, the buy now, pay laters, will be doing okay. So, something to keep in mind. But this is definitely a major fall for Affirm, especially from the beginning when you had that yen carry trade kind of blow up a little bit. Honestly, it was doing well, actually, with earnings. It's kind of a little bit after that, right? You had a high of 82.53 and then just a total erosion there. I think that was the day that Walmart was like, hey, we're not doing it. Yeah. I could have looked maybe a little bit closer in Affirm, too, to see how their new earnings kind of traded up and see if this is, worth the buy. But seriously, anything that gives, liquidity to the common person, I think is going to be in demand. I don't think people can stop. I mean, it looks like they are stopping spending in some capacity, but I think there's just more to spend money on nowadays. And so, they're going to do stuff like this. Anyways, that's kind of what we got going on. Pretty nuts. Let's talk a little bit about Qubit. Earnings were pretty bad for the company. I can't believe that it's up like this right now. Again, I think this is another issue with retail not fully kind of getting what Qubit's about and what its earnings said. We'll talk some more about that when we come back from the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Okay, welcome back, everybody. Jacob Shoup looking at Qubit right now, Quantum Computing Inc. They reported yesterday. Let's take a look at what they had to say. Okay, fourth quarter revenues totaled $62,000. Compared to $75,000 generated in the fourth quarter of 2023. The increase in gross margins, they had a 55% gross margin versus 13%, which is nice for them. Increased, let me see. It's primarily attributed to lower costs of goods sold in 2024. Again, I would kind of like to see a breakdown of what that is, because I think they're already engaging in kind of deceptive marketing a little bit. And so I'd like to see what that breakdown is. And again, like NASA contract, right? Everyone talks about the NASA contracts. It's $26,000. Okay. They've had it for a long time. Yeah, who knows what the heck that is being used for? Maybe they're just looking at it. They're probably looking at a bunch of different tech in this space, right? Fourth quarter 2024 operating expenses totaled $8.9 million compared with the previous year's fourth quarter operating expense of $6.6 million. The year-over-year increase is primarily driven by higher non-cash employee-based expenses, including stock-based compensation, increased depreciation expense for production equipment installed at the company's thin-film lithium niobate chip foundry in Tempe, Arizona. That's what I want to look at too, because I see a lot of people saying, hey, that's up and running now, it's all good. And they even say it in here, that construction for it is complete. Okay, so let's keep going on here a little bit. We'll walk through this entire thing. Cash used in operations for the full year ended 2024 decreased by $2.1 million year over year, driven by lower general and administrative expenditures. I think they're probably not doing much. Company reported a net loss attributable, okay, whatever. Total assets were $153 million versus $74 million, and that's basically just from common stock offering. This is crazy. They raised total net proceeds of $92.1 million through offerings of common stocks. Subsequent to the quarter, the company announced an additional offering of common stock rose for $100 million. Total liabilities were $46.3 million, an increase of approximately $41 million, primarily by the previously disclosed non-cash Q-Photon warrant accounting updates. Okay, and shareholders' equity. Okay, I want to talk. Okay. It secured its fifth task order from NASA, focused on developing quantum remote sensing technology for spaceborne LiDAR mission. This contract aims to lower the cost of climate monitoring missions while improving data collection capabilities. Where is that? Where is actually any of the money from these large NASA contracts being reported? And it's because they're not very large contracts whatsoever. And I think to some extent, this must just be, NASA just testing a bunch of different, tech that's out there. And they've had these contracts with NASA for a long time. And it moves the stock like tens of millions of dollars, and they don't even tell you really, you have to search to see how much the contract really is. And it's not a ton. And if you're getting all these new NASA contracts, that was in October. So where is when did they get paid for that? Again, it's not very clear at any place on their website when they get paid for that. And then if they already got paid for it, then why are your revenues lower in the fourth quarter? I mean, am I thinking about this the wrong way? I find it bizarre. They have the Dirac 3 machine, which is fine, but it doesn't seem like there's a lot of buyers of it. And they also explain it in a very convoluted way. And then what I really want to talk about is, give me a second here. They're Foundry. They're Foundry. Give me a second. We're gonna pull this up on Google Earth because I just want to show you guys where they're. And this is the location they have stated on their website. Give me 1 second here. Yep, okay, 2050 East, ASU Circle Suite 107. This is what they're saying is the Foundry. This is an office building. I don't even know, man, these are just like random little companies. You know, I mean, you can just see from the aerial view, this is not a manufacturing building. I mean, these are just like little air units for offices. And anyways, again, as I said, you can call these guys, not Qubit, but you can call Innovation Park or whatever the heck they call this thing. Business Park, I think, ASU Business Park. ASU Research Park is what it's called. I think this is not weird to anyone. I don't know what they're saying, and I don't know why people aren't looking into this more. This is where they claim this Foundry is. And for them to be like the construction is almost complete, I mean, it makes it sound like they're doing this big fabrication plant. I mean, they didn't even have any cash up until last quarter. So where are they getting the money from to build? And you're looking at like, okay, you take debt. I mean, their liabilities, like most of their liabilities, like near 99% of it came last year. So listen, in my opinion, this thing is just, they're just putzing around trying to, get some money for themselves. And I don't think anything's going to come out of this as well. And I also think, the assertion that thin film lithium niobate will get adopted immediately is kind of like, I don't really believe that at all. I think you have silicon is getting better, silicon carbide. I still think that thin film lithium niobate is interesting. I mean, you can do photonics over silicon. So, I mean, I don't know. This whole thing's weird. If anyone has like a bullish case for it, you can email me at jacob@tfnn.com. But the only bullish cases I hear are the NASA contracts, which again, unclear when they get paid for that. They've had NASA contracts for a long time. It's only like $26,000. But they're very, they're shady about it. And this is not this is not a manufacturing building. So what I think is going on, I mean, listen, I don't even think they could make a fabrication machine with the money they have. Look, to date, and this is from October, right? Okay, so September. I'm reading here. QCI anticipates, this is from them, that its chip manufacturing will commence operations in the first half of 2024. So, sorry, this is from 2023. I mean, look at this. This is how far out this thing has been. This is how long this has been going on. And again, remember, they were saying, if you remember me talking about this in like November or September, I was like, they said it was the first quarter of 2021, or excuse me, of 2025 that they're going to get this up. It's not there now. Okay, so they've already failed on that. So to date, QCI has placed deposits for the procurement of critical long lead equipment and paid other expenses associated with the new chip fabrication facility of $2 million. What are you getting for $2 million in the chip manufacturing? Nothing. This is all a big, I don't know, whatever. Stay right there, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, welcome back, everybody. We got a short little segment here, and then we are off for the weekend. Jeff, loaded with cash right now. Man, I'm feeling the same way. Freaky little market going on right here. You get the SPY trading off 0.35% at 563.43. Composite up about 0.26%. Oh, it's a little bit green right there. And then Dow Jones Industrial pretty much flat, but off about 0.09% at 41,920. With those Russell futures trading off 0.61%. Crude still ticking up. Dollar ticking up. Lucid's moving. 5.92%. Roku. They're going to be, man, look at Tesla roaring. What the heck? Up, up 5%. Tesla's more of a trade for us than a position. I don't know who that is, but yeah, anyways, how about that? Does this sustain into next week? Look at that. Some nice volume to the upside. You get some selling right now. We'll see what happens with that. Let's take a look. What Roku, that's some interesting stuff. I am going to be following along with Donald J. Trump's media tech. Now, actually, again, just unfortunate when you get into like an options position and, you get some just like news out of left field that's, opposite to what your position was. And what happens? Fine. Just close that position. Didn't lose a lot of money at all. They are going to start streaming on Roku. Now, I will say, I'm not saying that justifies this company being at $4.4 billion. I mean, the finances on this company are terrifying. But that is certainly something that I think will be successful. I really do. You know, you're already seeing that on YouTube. Why not consolidate all of that into a big, media company and stream it on Roku? It's good for Roku too. They're very loyal followers. I'm sure they would pay good subscription for it as well. Folks, thank you so much for joining me today. I hope you all have a fantastic weekend. It's gonna be a little bit cool if you're here in Florida. Really looking forward to that. We'll see you Monday morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.